Alright, sorry about the delay there, everybody. Just had an issue with my computer. My computer seemed to shut itself down at one point, and then whatever, some of the technology wasn't working. So we're starting 5 minutes late here, but no big deal. Roblox trading down after hours. Let's do it. I'm an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure. Yes, swings are, basically the same. We'll talk about the market here. I thought today was a frustrating day, really frustrating day, and I'm happy to chat about why. And maybe you guys disagree with me. Maybe you think it was an easy day, and maybe you guys have things that I can learn from you, and that's awesome too. I am all for that. So let's take a look at our markets here. Thanks, Patrick. Patrick Hall over here, the man with the plan, always giving me good backup support. All right, so SPYs closed the day up 0.25%. No big deal. It's a bull market. Q's flat to green. IWM relatively weak. Russell's down a percentage point. So let's go to the big picture here. So what we spoke about in our team morning meeting this morning was continued relative strength, or the potential of continued relative strength out of the NASDAQ. So on Friday, and I don't do an afternoon meeting on Friday, so if people were looking for a YouTube broadcast on Friday, I apologize. I don't do an afternoon meeting on Friday. We all it's the one day where we all call it quits a little early and go enjoy our weekend. But on Friday morning, I think we did a really good job identifying that the TLT was probably going to bounce, and that was going to lead to relative strength in the NASDAQ. And that is exactly what happened. I would say that the surprise, if you will, on Friday was the degree of the bounce in the TLT. I didn't think that we would get back that much in one day, but I'm not totally surprised by it either. So this call, if you will, came from the fact that after breaking this ascending channel here, we've identified 150 as a key psychological level for the TLT. We went down, we had a huge gap down, followed by 4 trading sessions in a row where TLT was down, interest rates are up. And really all I was looking for was a little bit of a snapback. This last day here, we got a doji. Next day, we're gapping up a little bit. So Friday, I'm like, all right, relative strength from the TLT should lead to relative strength in the NASDAQ. That's really what we were looking for. And my concern for the Russell, and I've said this a bunch of times now, is that the Russell, the IWM, small caps and mid caps, should be higher, and they're not, right? They should have gone higher in a big way starting on August 6th when the TLT broke down. When the TLT is going lower, that's when we expect some money to maybe come out of the NASDAQ. NASDAQ becomes a little bit relatively weak, and the IWM to catch a bid. Well, what happened here on August 6th, you almost can't even tell in the IWM what day August 6th is. It was a little bit of a doji, failure at 225 resistance, no upside follow through, consolidation. We actually spoke about the internals of the price action on Wednesday and Thursday being bullish, but we also mentioned that we don't want to read too much into these candles, right? The internal of this candle is bullish. You got like a wedge pattern here in the Russell that gave 2 downside tails in a row. But my concern was the fact that the IWM shouldn't be here at all to begin with. There's something wrong, that buying is not coming into the Russell when the TLT broke down the way that it was. So that's just a little bit of a warning signal, but warning signals are just that. They're just warning signals. They're not necessarily actionable in and of themselves. So then on Friday, we figured, all right, well, we're looking for this IWM relative strength to come in. I know I was incorrectly calling out for relative strength on a bunch of these days here in a row. Maybe we did see it on a day or two, but not for what I was looking for. And then we spoke about, all right, well, the Russell couldn't catch that bid. Now we're expecting TLT to get a bounce, so we should see relative strength from the NASDAQ. And that's what we saw. We saw some relative strength from the NASDAQ. You can see the NASDAQ here held up pretty well, whereas the IWM on Friday was weak. It sold off and more or less closed on lows. This morning, I was expecting a little more of the same. TLT was set to gap up this morning. Again, we know 150 is a big psychological level. So now that we're looking at the small time frame here for the Russell, I am not surprised at all to see this upside shooting star candle into extension on the small time frame into 150 being the high of the day for the TLT. But I didn't necessarily expect a big breakdown either. We didn't get that. We kind of just had a momentum upside move into 150 and spent the rest of the day going sideways. So the expectation for the day was relative strength once again in the NASDAQ. And, you know, and I was kind of half making sarcastic jokes earlier when Patrick took over the radio for the afternoon session in the virtual trading floor, the ProDesk virtual trading floor. I was kind of, you know, making some jokes earlier. Like, I love when, you know, like I've got like the Amazon Alexa at home, or you just turn on CNBC, or even worse than turning on CNBC is like you just turn on like your local TV news channel, and they'll just be like, oh, and the NASDAQ, and you know, it was a bullish day for the market today with the S&P 500 up 0.25%, and the NASDAQ closing in positive territory, right? That's kind of like how, and they'll say something about the Dow. I actually have no idea what the Dow did today because I don't look at the Dow. Dow's positive also, yeah, so for sure. You're gonna turn on that local news channel tonight and, oh, it's a positive day on Wall Street. The Dow is up 0.3%. But obviously they're not really talking about the internals of it, because I thought today was an extremely difficult trading session, one of the more difficult ones I've ever seen. And I'll talk about why. We were expecting relative strength to come from the NASDAQ. I also was a little bit concerned that the NASDAQ would top out when the shooting star came in here at 9:45. But what makes today so hard is you got all the big FANG names that we were looking at this morning. Apple, Microsoft, someone in the VTF this morning called out the Facebook level. And even though I'm not a big fan of Facebook as a company, it was a really solid technical level. We're looking at NVIDIA and AMD a little bit also. So our eyes today are on big tech. We know Apple 150 is a huge level. We've spoken about it a lot. We know that Apple broke out of its bullish wedge pattern to the upside on Thursday. Had a rest day on Friday. I actually would have loved for one more day of rest in Apple below 150 to start really setting up for this break of 150. But you don't always get what you ask for with the market exactly. Microsoft today, good opening momentum move, good opening volume. Facebook, fantastic. Someone in the VTF called this Facebook out in the morning meeting for a break of 365. And again, I don't like Facebook. I said I probably wasn't going to be involved in this one myself. But when I saw this thing break 365 on this opening 5-minute candle today with this confirmation volume, with this beautiful momentum, with the relative strength in Facebook, I was like, man, I forget who it was that called out Facebook in the morning meeting this morning, but what a great call out. I really hope you got stock. And then all these breakouts, all these big tech names failed on their opening drives. Facebook opening drive momentum through the level, relative strength, almost everything that you're looking for, you know, from a trade. Next thing you know, by 9:50, the opening low breaks. So here's something that people should have a general understanding with probability in the marketplace. It's a great little rule that you guys can remember for your trading. When you have an opening momentum move in the beginning of the day, especially an opening momentum move that leads to a breakout in the beginning of the day, and then gives a retracement of that opening move that is in excess of 100% of the opening move itself, the probability of a new high on the day is very low. I don't have an exact percentage for you on that one, but 5% maybe, I think is a rough guess. Probably even less than that. The probability of a new high on the day when you have an opening momentum breakout, and this one was like perfect too. Look at the opening volume confirmation in Facebook. When you have that in the beginning of the day, that gives a retracement that's in excess of 100%, and it was able to do that by 9:50 today. The probability of a new high on that day is very low. Of course, it ended up happening today. Look at Apple. And not only did Facebook, by the way, break this opening low, and that opening low is about 362.50. It dove another $5 below that. and then V-bottomed and made a new high on the day. Let's go to Apple. Again, our expectation, morning meeting today, relative strength for the NASDAQ. Were we wrong? We definitely weren't wrong. Look, Apple closed new all-time highs today. NASDAQ, was NASDAQ all-time highs closing on a closing basis today? No, not quite, right? Not quite. But Apple, new all-time highs today on a closing basis. Microsoft as well. But let's go to the Apple small time frame. Apple small time frame. What I really wanted today was for Apple to not break 150. I really wanted this thing to set up a little bit more. What happens here? Apple takes off like a rocket ship. Bullish option flows coming in. Look at this volume on these first couple of candles. Strong Maribozu. Volume picks up even further for the 150 breakout. There was a massive offer there at 150. I was a little bit concerned. I didn't really like the idea of buying 150 here, to be honest with you, because it was kind of a big move into it on that small time frame. You had all that size there. I thought this one might be a little bit sloppy. But like if you were coming in and you were buying this little retracement here, especially with this little tail in Apple, I love that. And even if you bought the break in 150 and you gave it to this low, you know, this low is below equilibrium. So this trade makes plenty of sense to me for anybody who took it. Again, great opening drive here in Apple. And then guess what? Same exact thing. 950 this morning, the opening low is breaking. Same thing. The probability of Apple giving a new high when it has an opening breakout on strong momentum volume in the beginning of the day that gives a retracement in excess of 100% is very low. And not only did Apple make a new high by the end of the day and close at highs, before it did that, it didn't just break the opening low. It just didn't just go to, 148.45 and frustrate some people and then go back up. No, this thing broke down another $2 after that. It went down to 146.50 and then V-bottomed and went to highs. It's massive. Look at this daily candle here in Apple. This daily candle almost looks like it's a mistake. It almost looks like this tail here is not real. It looks like the stock just woke up. Like if you could like hide, I'm taking my thumb and I'm like, put it over the tail. If you could like hide the tail on this Apple today, and you just showed it to me after the market closed, and I look at this thing, and I was like, oh, strong Maribozu in Apple. It didn't even wait at all. It just broke 150 and went. But the relative strength in the Qs makes sense. The relative strength in Apple makes sense. I'm not surprised. But that tail there, and then that 100% move is massive. Now, there were some signals here to consider coming in and doing some dip buying in the NASDAQ. I can talk about those. And there was definitely a trade here. So you can see that the Qs, and this is not unusual at all, that the low of the day in the NASDAQ is the highest volume candle of the day, and it's a hammer. It's just not very extended at this point on the small time frame with where it closes versus the tail. So like I like this thing, I like this trade a lot here actually, going long on a candle like this. If you have a good risk reward on the closing price with your stop loss at lows versus that same closing price and where the ADMA is. And that risk reward here is not even 1-to-1, so I don't like that too much. But you do have, big extension here from the NASDAQ 15 minute. You got big extension there that actually gives you a shooter that breaks to the upside. And there were a couple of other signals. Patrick here on the VTF perfectly called out the lower high in the VXX that was at 1025. So we expected that could lead to higher price action in the market. We also were looking at the fact that it is a bull market, and that bull market was down into support. And you got like I would call it a not so great. I like the bigger support that's down here at like 362. We have a little bit of support from this low on Thursday in the NASDAQ at 364.30 or so. You got the 21 EMA there. So we know it's a bull market in the big picture. This is why, by the way, we always start with the big picture and then we work our way down to the small picture, because the big picture is telling you that dips are buyable. And at the same time, as we know the big picture says that dips are buyable, we know the NASDAQ put in a high volume doji to bottom out for the day, as the VXX here, which I'm just looking at to represent the VIX, was making a lower high. So there were definitely signals that we could get a strong bounce, and I thought we were going to get a strong bounce. It's a bull market. I'm not expecting a massive breakdown breakdown at this point without, kind of more of a clear signal coming in. But a V bottom here in the Qs that leads to new highs in the Qs, new highs in Apple, new highs in Microsoft, new highs in Facebook after the opening break failure is kind of insane. It's kind of a crazy, crazy move. And to predict that or to capture that, I think is extremely difficult. Now, if you were coming in, and to make Facebook even more difficult, Facebook didn't bottom when the Qs bottomed, right? The Qs bottomed at 10:30. Facebook didn't bottom until 10:50. That makes that even more difficult. Apple did bottom when the market bottomed, but there's no real short-term buy signal in Apple either. The only way you're capturing this Apple move off lows, in my opinion, is if you just wanted to buy NASDAQ, but you just bought kind of Apple instead, which I do that sometimes. The trade's in NASDAQ, but I want to be long Apple, and we know that the indices are, one of our most important layers of probability for any stocks that are out there. So I definitely do this sometimes myself, where it's like, all right, I think that the Qs are bottoming here. I love this candle here, so you know what? I'm just going to come in and nibble on some Apple. But there's not even really a bottoming signal at all for Apple or Facebook. They just kind of V-bottom here and go. That makes this so difficult to capture. And if anyone did capture this stuff, you could still have stock at highs, but it's going to be very difficult to have a real position because it's a counter trend trade. And if anything, this thing got no real bounce here. This ADMA is catching up. This thing is looking bearish as heck. It just doesn't happen to break lows. So if you had a long position, it eventually does reverse. And if you trailed, I think it's reasonable for anyone who came in and recognized the things that I just spoke about and got their hands somehow on one of these FANG names that was really the number one thing on my radar for the day, and you caught this move, maybe if you're trailing properly, keeping in mind that it's initially on the small time frame and counter trend trade, maybe you still have 10% of your position at highs. It's just so difficult. And at the same time as, the market's doing that, and this is what we expected. We expected this relative strength from the NASDAQ today. So at the end of the day, if I took the day off and I was just checking out Yahoo Finance real quick from a boat or something like that, from Yacht Week out in Croatia or something, and just checking my Yahoo Finance real quick to see how things ended up, I would have been like, oh, of course the NASDAQ was relatively strong and closed decently well today, and the Russell was a little bit weaker. That wouldn't surprise me at all. It's just kind of the how that it did it. At the same time, I can't help but look at, there are just so many stocks that are so far off highs right now that we could go through. I mean, XLE getting hit today makes some sense, but there's just so many stocks out there that just seem to be so far away from their highs. It seems like the real bull market ended in February of last year. But because of money rotation, money dynamics, things that we talk about here a lot, positioning, flow, sentiment, for all those reasons, the actual indices themselves and a handful of these stocks that are just such a large market cap just have this market, really sitting here at all-time highs. So, I don't know. Personally, I found today to be an extremely frustrating day. I was just doing a lot of position management. I still am kind of having a less is more approach to the market here, big picture, because we are in the middle of August and earnings season is winding down this week. That we do still have some stocks. Roblox just reported after hours. We've got some of the retail stocks. We got like Target, Walmart. Some of those guys are Macy's reporting earnings this week. They can give us some things to focus on, but. Again, I try to keep it real here in the ProDesk VTF, and I personally found today to just be a little bit frustrating for the reasons that we went over. Very, very hard to capture that Apple move today. Very hard to capture that Facebook move today. Even when we were looking at the right things, it's just tough. So with that said, that's all I got for you all, and I'm happy to take a look at anything that you guys want me to look at. What do these Roblox numbers look like? Missed on revenue. Daily active users increased 29%. Q2 loss of 25 cents per share may not be comparable to the consensus. Revenues rose 126%, but nowhere too near what the market was looking for, it looks like. Okay, so a little bit of a struggle there with the Roblox earnings. What's the logic behind the move? I'm not sure, David, what you're referring to at that point. I apologize. I know you made that comment about 10 minutes ago. Brant saying it almost looks like news came out at 10:30, but I didn't see anything. Yeah. This was a really fast flush. If anybody was actually watching this price action, this is kind of the price action that you tend to see at short-term bottoms, and that short-term bottom can definitely turn into a bigger term bottom, especially when you're dealing with a bull market. But this move lower here and snap back up happened in like a minute and a half. It was that super fast flush down that was immediately bought back up on really big volume. Like that's actually the exact price action I'm always looking for at lows. The only difficulty I think about this candle, again, for me to find this candle tradable, I really want the closing price of that candle on the time frame that I'm looking at. I want the space between that closing price and the ADMA, and the space between that closing price and the low of that, because that's where my stop loss needs to be at least 1-to-1. And if it's not at least 1-to-1, I'm kind of setting myself up for failure. You know, this candle here tells me that I have a high probability, probably in excess of 50%, of seeing a time or price, more likely a price than time, correction back to at least the ADMA. So that's why greater than 50%, I always want this move to be at least 1-to-1. But outside of that, this really kind of had everything else that I was looking for. That super fast flush, the highest volume of the day, big picture we're in a bull market. NASDAQ is where I'm expecting relative strength to come from. VXX not confirming that we should go lower. This really kind of had everything there except for that real, risk reward on that spot. But yeah, it was a super fast flush right there. Yeah, Google too. Google has been probably my second favorite stock in big tech from just a charting perspective, continuing to grind higher. This is like a continuation doji here. Microsoft being my favorite. Microsoft's been my favorite stock on the market for a long time. I think everybody knows that now. Next from NAMCAP and the VTF is some of this interesting price actioning happening because of the indices are at close to all-time highs. I don't necessarily think so. I don't think it has anything to do with the fact that the indices are all-time highs. It might have something to do with the fact that we're in August. It might have something to do with, if you guys read Pat's morning note that he posts into the ProDesk virtual trading floor at 8:30 every day. By the way, Pat's morning note is a really important part of my morning research. I feel like I'm trading naked if I haven't read it. It's all big picture stuff. But if you understand the market dynamics from Pat's note and kind of how gamma and it's kind of creating like an underlying bid on this market, but it's also creating this tight upside grindy price action that we've been seeing. It's kind of facilitating that, and maybe that changes after this week because that's when options expiration is on Friday, so that should loosen up a little bit. But it's just an extra reason to kind of understand that this market should be tight right now. So it's not surprising to me to see that the market snapped back. It's not surprising to me to see that the market was weak off the open either. We spoke about this in the morning meeting. The thing that's going on in Afghanistan right now, it's just like, I'm not here to get political on it. I think that almost everyone that you speak to, Democrat or Republican, is probably saying for a long time that we should be getting out of meddling with foreign countries, and we should get our troops out there. And I don't really know anyone that's happy that we spent over $2 trillion in that country over there just for this to happen. But the stuff I was watching online at Afghanistan this weekend and this morning was super scary and tragic, and just it makes me feel so happy and lucky to be born in New York and born in the United States. Like, Can you imagine that? Can you imagine just being a citizen there in Kabul, and you're seeing that these last planes are your only chance to get out of here, or maybe because you work for the government or something like that, it's going to mean like automatic death and execution for your family and for yourself, and selling off your daughters to, just that, whatever they call that marriage out there. I mean, it's just so crazy seeing those citizens like trying to stack themselves on that plane, grabbing the tires. Man, I saw that video of that person. I saw that video of that person falling off the tire on the plane, obviously to their death, and I couldn't help but be reminded of seeing people on the news and stuff when people were jumping out of the World Trade Center back on September 11th. Just so grateful to be here and to not have to deal with that. But it makes sense that would spook the market a little bit. But like what we said in the morning meeting today, we know that stuff historically tends to really not affect the market, and if it does for a very short time frame. So maybe that's what actually led to the range expansion today, because the ranges have been so tight. We've been talking about that every day, and it's what's made for boring price action. So we got these macro things that are ongoing right now. You got that. You also have some stuff going on with China. That, all right, we got this gap down, we got this opening sell-off, but we still have like the vol control universe coming in with those bids, and then this just underlying bid in the market, all the cash on the sidelines is there to buy every dip, just immediately comes in and buys this market back up. So it's back to business as usual, but just with a little bit of a widening of the range. I think all that makes sense. So I think so to answer your question, I think that has less to do with the fact that the market's just at all-time highs, and has more to do with the market dynamics themselves. So gonna highly recommend that you read Pat's note that he gets here every morning, because it helps me to understand the current dynamics in the market, and what I can get away with and what I can't, and when the market's going to be more forgiving or less forgiving. Michael asked me how's the breadth been and where we can find breadth on a daily basis. I don't know if anybody's got the breadth numbers that they can post here into the virtual trading floor. I don't know what they look like right now. Maybe somebody else saw some feedback on what they use for resources on that. That's something I tend to just see after the market closes. We were pointing back in July, again, there's always these there's always something to be worried about with the market. And I'm not saying that we just purely ignore things that you should be worried about when the price action is bullish. No, we don't. But if the price action is bullish and there's things to be worried about, you just keep those things in the back of your brain. They become like maybe one more layer of probability that could be against your trades or whatever. But we know that there's been no signal here to go short this market at all. At all. There's been no signal to go short this market. That's why I'm not short. So that's kind of the big thing that we're looking for. But one of those concerns going back to July was breadth was terrible. And I don't know what breadth looked like today. I'd be curious to know. But I would assume that it's not great, considering that the S&P's up, the Dow's up, and the Q's are up, but the IWM is smoked. Breadth today was probably poor, and again, it's just another thing to keep in the back of your brains. Like I said before, it almost looks like the bull market ended in January, February, but the market keeps going higher for a whole host of other reasons. Maybe I'll do a video on why it's hard for markets to go down at some point soon. Maybe I'll release that video and the market will top. But yeah, it's just another one of those things that we want to keep an eye on for sure. Next here from Sebastian. How much is the difference in percentage in the risk of an A+ setup versus the other ones? Sure, so I can only speak for myself personally. I think that you got to come up with your own risk skew. So Sebastian, I assume that you were listening to my afternoon meeting last week where I spoke about building out risk skew based on risk reward and layers of probability. So you break down your trades into grade letters, and then risk skew is wanting to risk more in better trades that have a higher probability of success and a better risk reward than trades that have a lower probability of success and a lower risk reward or a worse risk reward. And that makes plenty of sense. For me, the difference. Oh man, let me try to do some. So for me, the difference is, I don't know what this turns into percentages. It's like tenfold almost. The amount of money that I'm risking in like an A+ trade versus the amount of money that I would risk in like my lowest tier, if that's kind of what you're at. And again, there's a tier system, right? I got the most I'm risking in this one, and then a little bit less on this one, a little bit less on this one, a little bit less on this one, all the way until the point where, you know, below what I would call a C-level trade. Anything below a C-level trade is something I don't have an interest in. So for me, the difference between an A+ trade and a C trade is about 10x. I risk about 10x more in an A+ trade than a C trade. So I hope that answers your question well enough there, Sebastian. Sorry about that, Michael. Cool. And anybody else have anything for today? I'm happy to do a little bit of a shorter afternoon meeting than usual, just if for no other reason than my own frustrations. Because I really am, guys. I was really frustrated today. I'm always the first to admit it. I'm always like an open book to everyone that I work with. And I couldn't not be an open book even if I wanted to be, because I'm the type of person, I really wear my emotions on my sleeve. It's always been my biggest trading weakness. It's probably one of my biggest personal weaknesses. Luckily, or I don't know, probably not related to luck, but I really don't let it affect my trading decisions. I trade kind of more or less the exact same. Why do I trade more or less the exact same? Because I have a game plan, right? And we spent a lot of time talking about game planning last week. Game planning is what breeds consistency. Rules and game planning breed consistency. So I know, even though I might be super frustrated on a day like today, that I still have to follow my game plan on all my trades, because that's the only way that I'm going to be able to have long run consistency. And then I can potentially go in, not during market hours, but I can go in and I can look and assess my rules and my game plans to make sure that they're sound for the market environment that we're currently in. And I prefer to do that pre or post market, when I can have a little bit of a cooler head. So is it still a bull market? It's the S&P's at all-time highs. You can't tell me it's not a bull market with the S&P at all time. I mean, it's literally by definition a bull market. The S&P's at all-time highs. Jorge, email tradedesk@t3trading.com on any system issue. Most likely you're trading a hard-to-borrow stock. So if you're trading a hard-to-borrow stock, you cannot have more than one sell position at the same time, because it thinks that you're getting short. So for example, if the stock is hard to borrow and you don't have a borrow, if you're long 1,000 shares, you have a stop loss in for 1,000 shares, and you're trying to put in an offer for 1,000 shares, that offer is not going to come in, because the system reads that you're only long 1,000 shares, but you have 2,000 share sell orders in. So you have to cancel one in order to place the other. So it's probably that the stock was hard to borrow. Back to Sebastian here, and for a B1 or like a second tier, it's probably about 4 or 5x difference. So like my A+ trades, I really kind of go all out in those A+ trades, and then like a B trade is gonna be like, you know, 4 or 5 times less. So like just to make up some numbers, maybe these are my numbers, maybe they're not my numbers. But for me, for like an A+ trade, maybe I'm risking like $5,000, and then like a second tier level trade, like a B type trade, I'm risking maybe like you know, $1,000 or so, $1,500, and then like a C level trade, like my minimum might be like $500. See how that tier comes in. Yeah, the gray L. Oh, and I was supposed to bring that up. Josh was supposed to remind me. I don't know where Josh went. Somebody asked me if I could just show this on Lightspeed real quick. Here, I'll show it for FSR, so I don't have a position in FSR. If it has a gray L here, that means that the stock is hard to borrow. So if you wanted to get a borrow on it and you're using Lightspeed, because you're a professional trader at T3, there's a short request button that you bring up, and you press locate, and then you can see how much it would cost. So if I wanted to short FSR, it would cost me $1.50 per 100 shares that I wanted to be able to short. And then if I wanted, I would press this accept. If I don't want it, I press cancel, and I didn't actually borrow it. if you pay to borrow the stock, you pay for it whether or not you use it or not. So the gray L means it's hard to borrow, as opposed to a green E means it's easy to borrow, and you can get short just by pressing the sell button whenever you want. Short plays valid. I'm Derrick, not Jared. Apple at 10:05. Apple at 10:05. Oh, YouTuber Jared. My bad. Oh, hey Jared. And I know who you are, Jared. We email. Because the rejection off that level, off the massive volume, or no, because of how strong we opened, and no clear. So this is a great question that Jared asked. Actually, basically he's asking, if you see a failed move in the market, does it mean you can take the other side of the trade? That's how I'm interpreting your question. And the short answer to that is yes, you can. The long answer to that is I don't do it. So, like, for example, we know, so there's a very common saying in technical analysis, from a failed move comes a fast move. If you're looking at a bull flag and that bull flag fails, a lot of times it leads to a very fast down move, because all of the people who are coming in and we're buying, they're all getting stopped out, and they're all rushing to the exit door at the exact same time. So maybe you're looking at this Apple and you're seeing it break the opening low here, and you're like, oh my God, this failed breakout, all this volume on this up move, all those people are out of the money, this could lead to a really fast move lower. The thought process is 100% correct. It's not a trade that I take. I think that taking the opposite side like that is difficult. It's difficult. And for my own trading, I'm a big believer, I think as everyone knows, in the acronym KISS, KISS, keep it simple, stupid. So I'm not a huge fan of like taking the opposite side of failed moves, just because I think it's not a simplistic trade. You're starting to really complicate your trading there. And I don't think that trading has to be complicated in order for you to be consistently profitable. So is there a trade there? Is it something you can do? Absolutely. It makes sense to me. But not just because of this pattern. Like, you're looking at 10:05 here. I know we talked about, like, through email, like bear flags into gap fills and stuff like that. I don't like this as a chart. The only thing that makes me like this at all as a short is because of the failed break higher. And again, that makes it a short. It just makes it a short that I don't have an interest in taking, because I think it's just too difficult of a trade. So thanks for that question, Jared. It was definitely a really good one. And yes, if the stock is circuit broken, you can still get short. You just have to get short on the offer. You have to offer out. All right, gang. I think that'll do it for today. It's Monday in August. We got the tail end of earnings season this week. I'll see everybody tomorrow morning, where we will do our usual ProDesk virtual trading floor routine. Figure out a game plan for the market for that day. Figure out what stocks we want to focus on. If you want to get part of this team, if you don't want to miss out, reach out to T3 Live and ask about getting involved with a ProDesk virtual trading floor subscription. Have a great night, everybody. Dude, it's hard to do these meetings sometimes when you're just fucking... Oh, whoops. I turn this off. I'm just getting distracted by 6